All right, good evening traders, 7th of September 2021. Today it was mildly volatile for the benchmark Nifty. We can see a beautiful Doji kind of a pattern which has taken a shape. 28 points negative for the index to close at 17,375. Interestingly, it did break the previous days, which is a Monday's high as well as low, which is like an outside bar. If you've been following my videos, I spoke about in my yesterday's video that we would get some more clarity in today's close whether the market has topped out or not. I think after today's close, the way it has taken a shape, the possibility and chance of a slip on the downside is slightly higher. Let me tell you my logic. If I take a look at the behavior of how prices have played out in today's trade, taking a look at the short-term charts, which is a 75-minute time frame here, this was the opening bar, which was slightly on the lower side, bit of consolidation, and then a pickup of momentum which takes out the recent high. Now, everyone who had gone contrarian short over the last few days, especially yesterday, would definitely look to keep a stop loss little above yesterday's high. That high was breached, which brings these short positions in an uncomfortable situation, and then for the rest of the day it comes down. Means it just breached the previous day's high just to slip down, which generally washes off, takes off the weak short stocks positions. And those who went short and they are weak, they don't have much conviction in their holding. Essentially, such move washes it out. So my anticipation of a further slip on the downside from the index will only come once today's low is breached. Break of today's low is the trigger, which is at 17,300, is the trigger for follow-through weakness. Now, how do I define follow-through weakness and how far can it go now? I exactly don't know how far can it go, but yes, 17,100 and the psychological 17,000 is the kind of level that we should work with, bare minimum. We know we've got a cluster of supports down here, but that's like 16,700, 16,500, quite a bit of distance from the current price. So first, let's deal with number one. If the index slips below 17,300 tomorrow, then the possibility of 17,100 opens up, and the chances of that is fairly high. So we'll keep this in mind. And if this plays out, then I would suggest to play a little, cautiously, especially those who primarily go long positions. This is a bull market, so it's not a very safe thing to go short. And even if you go, please make sure that you have some conviction and you've used your stop losses, etc. Just because of the fact that prices have gone up is not a good enough reason to go short, right? Okay, so I would suggest cautiously bullish is the stance, with an expectation that we are going to probably get relatively lower prices this week or the next one. Take a look at the sectoral behavior. Real estate came down the maximum, followed by IT, PSU banks. I spoke about how difficult the banks can cause, and even if you look at the chart of Bank Nifty, now it came down to the low of 36,250 just to test the previous highs. This is a very important, crucial juncture for Bank Nifty. In fact, and it will lead to directional clarity for the Nifty also. Now, what can we take away from the Bank Nifty chart? If the Bank Nifty breaks below today's low, 36,250, and it heads towards 36,000, then the index fails this breakout. This breakout turns out to be a failure, which means that the frustration or the lack of directional clarity within few specific banking stocks will continue. And because it has a 37-38% weightage in the overall market, Nifty might find it a little difficult to rally further. So banks will play a role. On the contrary, the fact that today the prices came down, it did test the previous resistances, has given support and bounced back. If we find strength tomorrow or sometime this week, if the index scales up towards 37,000, then that will actually infuse a lot of support to the Nifty. In that case, yes, the rally on the upside will continue. So it's better to stay cautiously bullish in the overall markets. The rest of the sectors were mildly negative. Private sector banks, energy, auto is one of the sector which is really weak. It's trying to find itself some grounds back. FMCG, thanks to ITC, which did close positive, but it's created a beautiful kind of a gravestone doji on the daily chart. So overall, it seems like most of these sectors tend to be a little tired, and we can get that clarity from these stocks also. These are the top 15 stocks which makes up the Nifty, and we can see very clearly that most of them closed negative, barring few odd stocks like Bharti Airtel, HDFC, and I did talk about ITC. The stock did give us a move finally, and hopefully that it will try and follow through this week as well. So I'll wrap it up by saying that stay cautiously bullish. Keep an eye on today's low, break of today's low for the Nifty especially. And yes, in that case, 200 to 300 points can open up on the downside. Does not mean a trend reversal, does not necessarily mean that the bull market or the long-term uptrend is gone. It just means a healthy correction. Till then, for tomorrow, trade well, trade well.